Tesla didn't release the best earnings, but upon good guidance, Tesla is up nearly 20% in the last 5 days. TSLY is also up double digits, 17% in the last 5 days. So it's no surprise that my TSLY synthetic is also up, but it's only up 6% in the last 5 days. And that's primarily down to me having a synthetic at the 150, which I did close out because it absolutely went through my covered call strike at 157.50, with Tesla currently trading just under $170. So we'll go through everything, all the trades that I made, how much money I've made, where I am on a yearly, monthly basis. We'll then also check out to see where Tesla landed and what we think is going to happen in the coming week. So again, if you like the sound of that, all I ask for is that you smash that like button and don't forget to subscribe. Now, as I mentioned, we're up 6%. So we've had a couple of down weeks with Tesla again continuing to go down prior to earnings. But Tesla did rally post earnings, making me go up 6% on the overall week. So if we have a look to see what happened, we heard the 157.50 call. Now I had to buy this back for a loss because obviously Tesla's trading at 168.29. But that does mean that my 150 synthetic was up, and it was up $1,800 for the week. So if we take the 1,800 minus the 752, that gives us just over $1,100. And what I decided to do is I decided to take or pay myself $650 of that, which equates to nearly a 3% return on my current capital. So that's what I did. I kept some and put it back into the NAV just to make sure that we, are topping up the current balance. So if we have a look on the right now, when we add in the 650, that's over $7,500 since near the end of December, which I've collected in overall premiums. That gives me a projected yield of 72%, which is just over $21,500 for the overall year at this current pace. And again, that is around just under $60 a day collected in premium using this strategy. So again, if we take this, if we're reinvesting the dividends back into the asset or into the strategy, I'm down 26%. But if you take out the dividends that I've collected or taking out as part of this, I'm down 33% on my initial 30,000. But again, as I've always said, the reason why this strategy is not performing that great in terms of a price appreciation is because Tesla has been down. So this is the arrow where I started doing the strategy, and it's gone down, 40 odd percent since then. So again, it's no surprise that, I'm down roughly around 33% once you factor in the premiums that I've collected. So what moves did I make them this week? So obviously I bought back my 150 synthetic, realized the gain, and I reestablished on Friday just before the close at 170, with Tesla closing at 168.29. So I decided for the first time actually is to sell the covered call at my synthetic strike price of $170, where I've collected $379 in premium, which is just under or just over 1.7% of the initial capital. So the reason why I went for the covered call strike at the 170 and not higher is because of where I think the chart's going to be. So you can see here, this is where the low of, what does that look like, 138.80, and then had a bit of a rally up into earnings. Then we get the spike up, drop back slightly, but over the last 2 days, we have seen Tesla start to rally a bit more and then kind of sell back off again. So again, it blew past its pivot, which is kind of expected with earnings. You can't really take out the pivot. As you can see here, it nearly hit its missed pivot level, which it might hit again, over the next week or two. Now, the reason why I sold the 170, so you can see here the 170 is where my synthetic and my cover call strike is, because I think that Tesla will actually drop this week. So there's two reasons for that. The first reason is this is where the pivot is, so I expect price to go down. It could go rocket back up, but I think it will continue to flutter along its pivot line. So that's the first reason. The second reason is you'll see here on the RSI is that, you know, we are kind of overbought here, and legacy is every time we are overbought, we always seem to get pullbacks. If I just take the last two sections here and this one here, we have seen legacy pullbacks coming in every time it's reached. So that's what I'm expecting to happen. Again, I would love it to continue to go up, which is absolutely fine. But I don't mind capping my gains this week because I do think we're going to end below 170. So if I was selling my cover calls at my cost basis throughout this whole down cycle, I would have made a little bit more money because I would have picked up a bit more premium. But so that's the way I'm going to play this. Is we're going to keep the strike prices the same, the synthetic and the covered call strike, and we'll see where we net out at the end of the week. And again, like I said, we got the pivot line, which is posting at 156 odd, I think. Yeah, 159.73, and that's where we're going to look for as a key level for next week. So again, I really hope you've enjoyed this video. And again, like I've always said to you guys, I'm making money every single week, right? You can see here, consistent money coming into my bank account. Yes, I'm down on the initial investment of the original 30,000 by 33%. But again, if I continue to do this and I can continue to keep this momentum going over the next 6-7 months, then I should be making my full 30,000 back, and then everything else will be considered as play money. And again, like I've always said, I've produced this amount where Tesla's gone down 40%. Now, don't get me wrong, it could go down another 40% from here. I'm not saying it doesn't have the potential to do that, but when this stock's been absolutely battered, you know, even if it continues to go, you know, trading within this sideways range for the next few months, it should be relatively easy for me to start continue to collect more money. And then, but if we start getting that move back up, then again, I'm going to benefit from that. I'm going to benefit from, you know, the synthetic making money, the covered call making money. And if we can trail it really slowly up as opposed to a violent move up, again, that is the best course of this strategy. But again, even with being down 40%, I'm still collecting income, which is the main point of this strategy. So again, if you've got any questions, comment down below, and I shall see you guys in the next video.